Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness section, and we had started with the banking history. In the previous lecture, we have looked upon several facts and figures related with the banking history. Basically, in this lecture, we are going to continue with the same and we will have a discussion over other facts and figures also. Okay. So I hope that you have revised the previous ones before you have come for this lecture. As I have told you so many times, that is for your own benefit. Alright. So with this note, let's start this lecture. So topic name is financial knowledge. And within the financial knowledge, we have the banking awareness, what we are studying. If we talk about the content we are going to study in this lecture, so it's a banking history section. Alright. We are covering the banking history. Okay. Now come to the topic. So in the previous lectures, we have looked upon the formation of RBI and all that things. Now we are going to talk about the nationalization of bank, which is the fourth heading. Okay. So basically it was the year of 1949, 2 years after independence. Okay. Since from 1770 to 1947, banking sector of India was under British control. Right? Because they were ruling the country. Alright. So after 1947, when the India got independence, and even after 2 years of the independence, that was the year of 1949, Government of India nationalized the Reserve Bank of India or RBI, making it fully state owned and giving it more regulatory powers over the banking system. Okay. Like in the previous lectures, I had told you, we had the Presidency's Bank Act 1876. This act basically put all the Presidency's bank under one single management. Okay. Thereafter, we had seen Imperial Bank of India, which was formed by the Britishers in the 1921. Okay. In which they merged all the resources of all the three Presidency's bank, like the Bengal, Bombay, and Madras Bank. Okay. They merged all their resources, and thereafter they wanted to convert the Imperial Bank of India as a central bank. This idea was basically opposed by whom? Young Hinton Commission. The Young Hinton Commission was appointed by the British government to give their reviews and suggestion over conversion of Imperial Bank of India into the central bank. Okay. What was the need? I had told you that other other European powers was also trying to intervene in the Indian market. Okay. Indian banks were collapsed continuously. So that's why they are trying to making a centralized bank to regulate the market. And they wanted to convert the Imperial Bank of India as a central bank of India. But Young Hinton Commission opposed this idea and they said we required a separate body. And that's why we had seen there was a Reserve Bank of India Act 1934, which established the Reserve Bank of India as a central bank of India. Okay. Now, here is my little question for you. The question is, when the RBI Act 1934 passed. Okay. So, where were the headquarters of Reserve Bank of India first established? This is question for you from my side. 15 seconds you have to think and answer, and your time starts now. Just think about it. I had told you. Last 5 seconds. Time's up. So remember, I had told you when the Reserve Bank was established, its headquarters were at Kolkata. Okay. Thereafter, the headquarters moved to which place? Moved to Mumbai. And even today, the headquarters are at Mumbai. All right. So that was the basic revision we have done. Okay. But now come to the topic. Remember, I had told you when the RBI established in the year of 1934. And who was the first governor? The first governor was Sir Osborne Smith, right? He was the first governor. Okay. On that time, the RBI was a private body that was not nationalized, or you can say that was not under the government powers. Yeah, it was established as a central bank of India, but it was acting as a private body since 1949. 1949 was the year when the government of India, or you can say when the independent government of India or government of independent India, whatever you want to say, you can call it, nationalize the bank, means put them under the government control. And that's why it's become fully state owned. And then it's get a regulatory powers to control the banking system. Okay. So remember these details. When the RBI was established after 1934, it was established as a private body till 1949, when the independent government make it fully state owned and provided it with the regulatory powers to control the banking system. Okay. Now let's move forward. Thereafter, the first step was happen in the 1949 when we convert the Reserve Bank of India as a State Bank of India. Oh, sorry, State Bank of India, not as a state-owned bank. Okay, it means it was put under the control of the government. But somehow there were other major banks of that time which were under control of private players. And what were these banks? We have a discussion over them. Okay, so there were so many banks operating in India. Okay, and there were so many Indians, maybe the traders, maybe the merchants, maybe the normal people, they had their deposited with these banks. Remember in the previous lecture, I had told you a golden line. No one is more greedy than bank. That was the first line I told you. And second thing is that, which I am telling you right now, banking required an immense knowledge. Immense knowledge, experience, and expertise is required in the banking operations. So that's why the banks we had on that time were in the hands of the private players who either greedy or who either incapacitate to operate the bank. Okay, and the growing economy, or you can say growing demand of monetary economy, pressurize the economic system or banking system to increase their activities. And because they were struggling to lack of the knowledge, expertise, and all the things, there was a collapse of bank in a rapid form. All right. and this raised a serious concern over the economic management. Because as I have told you, when the banks collapse, the economic system collapse. Okay, that's why that was the year of 1969 when a major milestone in the Indian banking history was the nationalization of 14 major private banks. It means that the government of India, after seeing all these things, wanted to take over management of 14 major private banks. Okay, because these banks had a good amount of consumer base. Okay, that's why they were the major banks. And if the government occupied these banks management, it means that government could better control the banking operations. Okay, transforming them into the public sector banks to increase banking penetration and extend credit facilities to priority sectors. Now, what are the priority sectors and what is the credit facilities? Now, if we talk about this, then we will have a you can say justification why I always say no one is more greedy than a bank. Okay, so just take an example. Suppose this is the XYZ bank. Okay, XYZ bank. This bank had a deposit of rupees 10 lakhs. Okay, as per the RBI guidelines, 2 lakhs have to keep with a CRR. Okay, 2 lakhs keep with as a SLR, cash ratio, statute liquidity ratio. Okay, and at least you can say 1 lakh is kept as a net demand and liability. Okay, it means that 1 lakh is kept by the bank as a reserve if people withdraw their money on day-to-day operations. Okay, so if we plus them 2 to 4 and plus 1 5, total 5 lakhs out of 10 lakh has been reserved in the form of CRR, SLR and net demand and liability. So it means that only rupees 5 lakhs could be granted as loan to the people or to the public. Okay, out of the deposit of 10 lakhs, 5 lakhs has been reserved. So only 5 lakh is available to grant as a loan. All right. Now, here comes the picture. Now, two persons have arrived. First is Mr. A. Second one is Mr. B. Okay. All right. So, Mr. A is a farmer and Mr. B is a businessman. Now, bank wants to offer the 5 lakh as a loan. Mr. A is only able to take a loan on 4% interest rate. Okay, for a long duration. Because if a farmer, then he will have a long duration to repay. Okay, and even he do not have a sufficient collateral security or the, you can say, thing to be kept as a guarantee for the bank if he fails. Whereas Mr. B, who is even able to take the loan at 8% for short duration and long duration, whatever the duration you are offering. Okay, so if we look from this point of view, XYZ having more benefit if they grant loan to the B. The first is that their interest rate is higher than the A. Second, he is able to take the loan for short and long durations both. Okay, whereas A only able to borrow the loan at 4% and only for the long duration and all, and even he do not have a sufficient collateral security to give to the bank. Okay, so that's happened with the banks, and banks generally granted and preferred the person who having the more interest rate power because the bank will earn more. Okay, only 5 lakhs they have, limited resources they have. So what they say, they granted the 5 lakhs to B, not A. Okay, so where A should go now? If the A is not able to borrow the money from the bank and he wants 5 lakh, then he will go to the money lenders or predatory loan lenders. Right? And then as we know, there will be a condition of exploitation. Okay. So as he belongs to the farmer sector, that's why there are some sectors like the agriculture, okay, like the housing, all right, like the education, okay, like you can see the electricity, like you can see the health, and etc. There are so many sectors which are considered as a priority sectors. It means that the government wants to give loan to these sectors so that their development could be done, because their development will be a development of economy and well-being of people. But for a bank, a preferred customer is always the one who could be a high interest rate. All right, that's why the government started controlling these banks to extend the credit facilities to the private sectors. Okay, it means that the private players who were not interested to give loans to these sector members, because these sector members are not able to bear the high interest, and the loan amount is basically giving to the people who bears the high interest rate. Okay, but when the bank transfer to the government, these people will give the first priorities in the name of priority sectors. Okay, so these were one of the major you can say reasons for nationalization of these 14 major banks. So let's have a look on these banks. Okay, whichsoever banks were you can say nationalized. First is a State Bank of India, SBI. Headquarters in Mumbai, established in 1806. It is the largest and oldest commercial bank in India with a widespread presence domestically and internationally. All right. So basically, there is a little bit controversy if you see this one. Okay, and let me resolve the controversy for you. Okay, so basically, the State Banks of India, or you can say the State Bank of India Act, was passed in the year of 1955. Okay, which actually established a State Bank of India. All right. So remember this one, 1955, first date is time. So if you say 1955 was the act which established the State Bank of India, then why I am writing down 1806 here? So let's have a discussion over it also. Do you remember the Imperial Bank of India was established in 1921 by the merger of which banks? Which banks were merged together to form the Imperial Bank of India? Bank of Bengal, let me write down again. (1806), Bank of Bombay, 1840, Bank of Madras, 1843. These were the three banks who got merged together to form the Imperial Bank of 1921. And the Imperial Bank of 1921 were basically converted into the State Bank of India through the State Bank of India Act 1955. So the base of creating the State Bank of India came from the Imperial Bank of India, and the base creating the Imperial Bank of India came from the Presidency's banks. And the first Presidency's Bank was established in the 1806. So technically and historically, if we try to find out correctly, okay, it's just rhyming. Try to find out correctly, then we will find it. 1806 should be the main year which established the State Bank of India, if you're tracking down the history. Okay. But from the examination point of view, you could mark the State Bank of India Act 1955 as a, you can say, perfect answer. Okay. So establishment basically started from the 1806, but the final phase was completed in 1955. And then it was nationalized in the 1969. Okay. Now, Punjab National Bank, PNB in short. Okay. So it is known as, its headquarters lies at the New Delhi. Okay. It was established in 1894 and one of the prominent nationalized banks known for its nationwide presence. All right. So let's have a little bit talk about this bank also for our additional knowledge. Okay. So basically this was the year of 1894 when the board members met in Lahore. Okay. And thereafter, that was the year of 1895 when bank was started. Okay. So the members who wanted to establish the Punjab National Bank were first met at 1894 in Lahore, and in the year of 1895 the bank was finally started. And if we talk about its significance during this time, it was the first bank to be operational in Indian capital, or you can say operational on Indian capital. Now here, if I'm saying capital, basically I'm talking about the money. Okay. The money initially invested in the formation of bank. Okay. So it was the first bank which gathered the Indian capital or the monies from the Indians from where it started. Okay. However, the Bank of Hindustan which was established in 1770. That bank was basically based on the European management. Okay. The European management was basically the sole owner of this bank. Okay. That's why the PNB considered as the first bank to operate on the Indian capital. Okay. Thereafter, Bank of Baroda, headquarters at Vadodara, Gujarat, was established in 1908, a major public sector bank with a global network. I hope that you have listened its name before I am telling you. Okay. So if we talk about its history, then basically it was founded by Sayaji Rao Gaikwad III. Okay. Basically, that person was the founder and he was the king of Baroda, the Gujarat region from where the bank was founded. Okay. And Sayaji Gaikwad was not the government. So that's why it was established as a private bank with first branch at which city? Ahmedabad. Okay. So Sayaji Gaikwad III was the founder. He was a king of Baroda. Okay. Founded in 1908 but started operation from 1910. Okay. established as a private bank with first branch in Ahmedabad, and thereafter from the 1969 it is operating as a public sector bank. Okay. Now, Canara Bank. Headquarters are at Bangalore, established in 1906, known for its significant presence in the southern India. Because if you talk about the Karnataka, then is a major, you can say a major state of Karnataka. So the South India, sorry. All right. Okay. But here, if we talk about the founder, then the founder was Shri Ambembal Subbarao. He was the founder of the Canara Bank. Okay. And remember one thing. When the bank was founded, then its headquarters were at Mangalore. Mangalore is also a, you can say, city of Karnataka. Okay. If today's term we talk about, then the headquarters are at Bangalore. But when it was established by the Shri Ambemlal Subbarao, then it was established in the Mangalore. Okay. And it is significantly present in the southern India. All right. Okay. Now let's move forward. Now we have the Central Bank of India. Okay. Headquartered at Mumbai, Maharashtra. Okay. Established in the year of 1911. It is also known as for its significant presence in the southern India. All right. And also in the central India. Okay. So it's basically, if we talk about the founder of this bank, okay, who was the founder of this bank, then the founder was Sir Sambhaji Pochakanawala. He was the founder of the Central Bank of India, who founded the bank at Mumbai. Okay. And if we talk about the significance of this bank of that time, then it was fully owned and managed by the Indians. And you can say it was the first Indian commercial bank. Indian. Let me write down again clearly that it was the first Indian commercial bank fully owned and managed by the Indians. Okay. So that was the significance of this bank. All right. So students, in this lecture, basically we have looked upon several nationalized banks. Okay. We have discussed the facts and figures related with these things. In the next lecture, we will continue with the same topic. Right now we have completed till E. In our next lecture, we will start with the F. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the next lecture. With this note, let's end this lecture and thank you.